Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 1st, 2024, and we're diving into the latest earnings report from Simon Property Group, a leading real estate investment trust known for its premier shopping, dining, and entertainment destinations. Joining us is John, our senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. I'm excited to discuss Simon Property Group's third quarter results and what they mean for investors.
Revenue and profitability overview. Let's start with the top line. Simon Property Group reported a net income of $475.2 million, or $1.46 per diluted share, for the third quarter of 2024. This is a decrease from $594 million, or $1.82 per diluted share, in the same quarter last year. John, can you elaborate on these figures?
Absolutely. The decrease in net income is primarily due to a non-cash net loss of $49.3 million related to a mark-to-market adjustment of the Klépierre exchangeable bonds. However, it's important to note that their real estate funds from operations, or real estate FFO, increased by 4.8% year-over-year to $1.144 billion, or 3.05 per diluted share. This indicates strong operational performance despite the dip in net income.
And how did their revenue perform?
Simon Property Group's total revenue for the quarter was $1.48 billion, up from $1.41 billion in the previous year. This growth is driven by increased lease income and other income streams, showcasing their ability to generate consistent cash flow from their properties.
Operational efficiencies and future outlook. Simon Property Group has also reported improvements in their operational metrics. Can you tell us more about their net operating income and occupancy rates?
Certainly. Domestic property net operating income increased by 5.4%, and portfolio NOI grew by 5.0% compared to the prior year. This reflects their effective management and operational efficiencies. Additionally, their occupancy rate improved to 96.2%, up from 95.2% last year, indicating strong demand for their retail spaces.
That's impressive. What about their future outlook and dividend policy?
Simon Property Group has affirmed their full year 2024 guidance and raised their quarterly dividend to $2.10 per share, marking a 10.5% increase year over year. This is the fourth consecutive quarter they've increased their dividend, which is a positive signal for investors looking for income stability.
Strategic initiatives and development activity. Simon Property Group has been active in expanding and developing new properties. Can you highlight some of their recent strategic initiatives?
Of course. They recently opened the Tulsa Premium Outlets in Oklahoma and expanded the Busan Premium Outlets in South Korea. These developments are part of their strategy to enhance their portfolio with high-quality retail destinations. They've invested $537.7 million in capital expenditures for the first 9 months of 2024, focusing on both new developments and redevelopments.
How is their financial position supporting these initiatives?
Simon Property Group maintains a robust liquidity position with approximately $11.1 billion, including $3 billion in cash and $8.1 billion in available credit facilities. This strong liquidity allows them to pursue growth opportunities while maintaining financial flexibility.
Risks and challenges. While Simon Property Group has shown strong performance, there are always risks and challenges. What should investors be aware of?
Investors should note the decline in net income, which was impacted by a $49.3 million non-cash loss from the Klépierre bonds. Additionally, the retail sector faces competitive pressure from e-commerce, which could affect future leasing activity. Their interest expense also increased to $226.4 million, which is something to monitor as it impacts their bottom line.
These are important considerations. How should investors weigh these risks?
While these challenges exist, Simon Property Group's strong operational performance, strategic expansions, and solid financial position provide a buffer against these risks. Investors should consider these factors in the context of their overall investment strategy.
Key takeaways. In summary, Simon Property Group has delivered a solid performance in the third quarter of 2024, with strong revenue growth, increased dividends, and high occupancy rates. Their strategic initiatives and robust liquidity position them well for future growth. John, thank you for your insights today.
Thank you for having me. It's been a pleasure discussing Simon Property Group's performance.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Simon Property Group's performance in the comments below. Until next time, happy investing.